if we look at it today, gold is trading around 2350. So if we look at the economics at a 2350 gold price, you're now looking at an after-tax NPV of 632 million, after-tax IRR of 92%, and just over a 1-year payback.
Hello to those tuning into the Assay TV, where once again I'm delighted to be joined by Luke Alexander, the President, CEO and Director of Newcore Gold. Welcome, Luke.
Yeah, hi Katie, thanks for having me on.
So just for those who aren't familiar, can you just give us a little refresher as to Newcore's journey so far, please?
Yeah, so Newcore Gold, we're listed on the TSX, NCAU is the ticker, as well as we trade on the OTCQX. NCAUF is the ticker on that market. So Newcore Gold, we're advancing the Enchi project in Ghana. It's a district scale development stage project that's fundamentally underpinned by a PEA that we put out last week. We outlined some very robust economics within that PEA. We've had a very strong response from the market since publishing that PEA, with the stock up over 50%. And we see a real re-rating opportunity for the company to come as the market continues to digest just how good the economics of this project are. So that's the high level district scale exploration, fundamentally underpinned by very robust economics that we outlined within an economic study.
Thanks. And you've just said about the PA, that was the big news last week. Let's go into a little bit more detail there. What are some of the numbers?
Yeah, so what we outlined is a very simple open pit heap leach project at an 1850 gold price, which is the base case that we used for this study. We're looking at an after-tax NPV of US $371 million, after-tax IRR of 58%, and less than a 2-year payback, so a 1.6-year payback on that project. In terms of the production profile, we've got a great production profile of 122,000 ounces per year, and a good all-in sustaining cost of $1,018. Again, one of the things that really helps the economics of the project is the fact that it is a simple, straightforward heap leach projects, which are much lower capital projects to build. So we're looking at $106 million to build the project. So we've got an after-tax NPV at 1850 of $371 million relative to a capex of 106. So when you look at this from an NPV to capex perspective, so for every dollar I'm investing to build the project, how much NPV am I getting? So we're getting a 3.5 ratio from that perspective, which is very attractive. And one of the things that we keep saying is, we challenge anyone who's watching this interview to go find a project that's at a development stage within a junior company, which has such attractive economics. So needless to say, I'm not surprised at all that the market has reacted the way it has. And we think that there's a lot of room to run as the market and investors continue to digest just how great these numbers are.
And you just said the base case was 1850. How do you think the economics would change there if you use the spot price for gold, as we know is very, very high at the moment?
Yeah, good question. We have had a number of investors and others ask, well, why did you use such a low gold price of 1850? So if we look at it today, gold is trading around 2350. So if we look at the economics at a 2350 gold price, you're now looking at an after-tax NPV of 632 million, after-tax IRR of 92%, and just over a 1-year payback, so 1.1-year payback. Again, back to that NPV to capex ratio, you're now looking at a 6-time ratio. So again, at today's prices, this is a phenomenal project. At 1850, it's a great project. So good leverage to the gold price, which I think ultimately is something people look for when they look at these types of projects.
And in our previous interviews, we've spoken a lot about de-risking. The company's worked very hard to de-risk the project. Can you outline some of the de-risking developments that you incorporated into the PEA?
Yeah, so over the last number of years, we've done a huge amount of de-risking work on the project, which is obviously very important as we move it towards a PFS and ultimately put it into production. So some of that work is detailed metallurgical test work. So we, over the last few years, have done over 300 different met tests on the material on our project. So we're up to over 390 total tests done now. Of those 390, we've done over 20 column tests on the project. And what that's outlined is that this project is very amenable to a heap leach operation. So this tropical saprolite leaches very well. If you look at the column test work, we've averaged about 91.7% from, so call it 91, 92% from a recovery perspective. We then went and did 2 bulk samples. So we took material from Sium, which is our largest deposit, and material from Boeing. We put together 2 15-ton composite samples, and then we ran a 60-day leach test over that, and we had 92, 93%, around 92% recoveries within those bulk test samples. So that further validated all of the column and bottle roll test work that we had done prior to that. And again, so that's one of the big optimization things that we've done. We've also obviously got 2024 numbers and costing that's included in this PEA. So one of the things that the mining sector's seen, that I think all sectors that we at home have seen, is a lot of inflation globally. So we've got, 2024 numbers. And I think it's also important to highlight that the consultant we used is a group called Lycopodium. It may be a household name for a number of people listening today, but they've got a great track record of building projects in Africa and specifically in West Africa. So we leveraged all of the work that they've done on the continent. They're in the process of helping Newmont build an expansion in Ghana. So we were obviously able to leverage all of the different pricing that they've got from that project, as well as projects across West Africa. So we're extremely comfortable with the numbers that have been presented within this PEA, as well as we've completed a social and environmental baseline study. We're doing condemnation drilling on the area where the heap leach pad will go. We are doing hydrological test work as well as geotech work on the project. So all of those things further de-risk the project and ultimately support the robust economics that we presented within this PEA.
So clearly the numbers are very strong, very robust. What opportunities are there to actually improve upon them?
So additional test work is something that we'll look to do. Metallurgical test work, for example, you look at those column tests and the bulk samples that we did, and we're averaging almost 92% recoveries in those. Within the PEA, we included just under 82% recovery. So that's something that we think we can optimize on in the future. But then the other thing is we're looking at a 9-year mine life today. Again, 122,000 ounces of production. So a nice production profile with 155,000 ounces of peak production. But we're sitting on a district scale exploration project. So all of our deposits remain open along strike. They remain open at depth. So our view is that we've got a 9-year project today, but as we continue to explore, as we continue to add additional ounces across the project, that's something that will ultimately end up extending the overall mine life of the project, which then adds to the overall economics. So that's something that we are focused on, in the future, is bringing those ounces into future studies.
Excellent. And just to look at the broader picture a bit, for those who aren't as familiar, can you touch on Ghana and what are the key advantages of operating there as a jurisdiction?
Yeah, so Ghana, for those who don't know, it's Africa's largest gold producer, produces roughly 5 million ounces per year. It's got 3 of the top 10 largest gold producers on the planet with significant operations in Ghana. You've got Newmont, who I highlighted, is investing an additional $1 billion into their Ahafo project, which within their overall portfolio will make it the 2nd largest producing asset within that portfolio. So, we obviously can then leverage off of all the mining expertise that there is in country, as well as there's a government who's extremely motivated to see these projects get into production. Little example of that would be, within 15 minutes of this study going out, the CEO of the Minerals Commission sent a note through saying, congratulations on the great results to you and the rest of the team. And, how can we help move this project forward and ultimately get it into a production, into a producing mine. So that kind of support is something that, really ultimately is something that differentiates Ghana from a number of other jurisdictions out there, in my view.
Excellent. So there's been loads going on. You've got great economics, great jurisdiction. What can investors look out for in the next 6 months, would you say, to summarize?
Yeah, so we'll be out there obviously highlighting the economics of the PEA that we recently put out. We're doing a lot of additional met test work. We're doing exploration work across the project. And then we'll look at outlining the next steps of taking this to a PFS and ultimately putting it into construction. So that's the big focus for us, is de-risking as well as continuing to grow the overall project through exploration.
And just to summarize for our investors that might be a bit busy to watch the whole thing, what are the key takeaways for the PEA, the project, and the company?
Yeah, so Newcore Gold as a company, we're very well aligned with shareholders, management, and board. We own 22% of the company. This is money we've invested alongside investors over a number of years. We've recently put out a very robust economic study, PEA, which at an $1,850 gold price outlined an after-tax NPV of US $371 million. So a true fundamental underpinning of value that, as the market, in my view, starts to recognize the economics, will start to re-rate the company. So those would be a couple of things I would encourage investors to look at, along with that tremendous district scale exploration upside that we've got. If you look at the Sefwi Bibiani belt that we're sitting on, we've got a number of 5 million ounce plus deposits that sit along trend from us, including that Ahafo project that I talked about, where Newmont's investing another $1 billion. So district scale exploration that, in my view, has a fundamental underpinning of value that will re-rate the stock.
Well, that draws a close to our interview. I want to say congratulations to Newcore on such a great turn of events, and we look forward to catching up soon.
Thank you very much, Katie.